Hey, everybody, Boris speaking at Forex. Welcome to the weekly technicals for euro dollar, dollar yen, pound dollar, the majors for August 5 to August 9, 2019. The big story, of course, at the end of the week was the major risk off moves in the currency markets and in the equity markets, which then drove yen and Swissy to fresh highs and really killed the dollar pretty much across the board. It really wasn't the Fed. The Fed cut rates, but the impact on the dollar was actually relatively minimal because the Fed sort of tried to have it both ways. They didn't really assume a dovish posture. They didn't assume a hawkish posture. But regardless, you could pretty much clearly see that they just didn't want to do this, and they were really forced by the market. So the market took that all in stride. However, after the Fed, Trump's threat of further tariffs against China and then potentially fresh tariffs against Europe have really stoked fears of a fresh, renewed war in trade, and that just destroyed risk across the board. And that was really the driver that took U.S. yields below the 2% level, took the dollar right off all of its rallies post-Harris. So now, what's kind of interesting as far as levels go is that the euro really came within inches of the 10 level and then bounced right back, and now we're at 11. And we're really sort of 110, 112 range at this point, with 112 being the near-term resistance. Yen collapsed completely and is really in danger. This is the critical thing. If risk-off flows begin to truly accelerate, it could be in danger of taking out the fat finger lows from the beginning of the year at around the 104.50 level. And that could really have some very, very negative impact all across the board, because the one thing Japan cannot afford in any way, shape, or form is super strong yen underneath the 105s, because that will pretty much take down all of the Asia export business and certainly could have ramifications all across the board. And then cable also got destroyed on Brexit rhetoric, as Boris Johnson appears to refuse to do any kind of compromise with Europe. And that took the pair all the way down to the 120 level. But what was interesting was the fact that his majority in Parliament now stands at just one seat, and essentially creates effectively almost a guarantee that we're going to have an early election before the October deadline for Brexit. And that in turn, of course, is going to be the big turn, because if the overall vote in the election produces a anti-Brexit, a Remain majority, it's going to be impossible for Johnson to essentially compose Brexit. So pound is holding on for dear life here at the 120 level as we start the month. But in many ways, when you look at the situation from an economic point of view, the story in UK is actually nowhere near as bad as the pricing goes. And should there be some kind of a deal on Brexit, it will almost inevitably create a beach ball in water effect, and pound is going to really, really skyrocket, maybe 3-4 figures in a matter of a week. Now, taking a look at the actually, before we take a look at the charts, let's take a look at the data this week is relatively truncated and muted across the G3s. We have the PMI data out of Europe. Here, the critical thing that's everybody's going to be watching is to make sure that the composite does not drop below the 50 level. We know the manufacturing in Europe is already in a recession, but if services really start to drag to the downside, it's going to put tremendous amount of pressure on euro. And we could revisit 110 just off that data set alone if for some reason the composite actually really comes in much weaker than expected. The UK data is also going to be weak. We're basically mildly bearish that because consumer confidence came in positive, but manufacturing is really down. So the composite in UK probably is going to be also underneath 50, but going to have very little impact because it's all really going to be Brexit related as we go forward. Then into the US side, we get to see the ISM non-manufacturing, and here it could be a positive surprise to the upside, but how much of impact it's going to have on the dollar is really immaterial because the market is so focused now on trade war rhetoric, and most importantly, this escalation not only just between China but between US and Europe that could get completely out of control. So at this point, the data is definitely going to be second hand to what the political rhetoric will be as we go forward. Then into the rest of the week, there isn't much data on the major side. We do have a little bit of industrial production out of Germany, then GDP data out of UK, and here we're basically sort of mildly bearish pound. The fact that retail sales were weak is going to be a big drag on the GDP. So that could really put it down. And then finally, I think on Friday we just finished up with U.S. PPI data. And here we're clearly concerned about inflation. Inflation is still underneath the 2% level, so that really doesn't help the dollar as we go forward. But overall, as you can see, it's really all second-tier data in the G3 block. The primary focus will be on whether the PMI out of Europe sort of maintains itself above the 50 boom-bust level, just how strong UK is at this point, and where the GDP in UK is, and whether the US data really has, especially on the services side, has any oomph behind it. Now, when you look at the charts here, and let's go to the Euro chart here. The thing that obviously strikes you is that we had a very clean, nice little doji reversal off the 110s. And as long as I think the data holds here, the weakness on the dollar side is really what's driving this anti-dollar flow here. We could potentially move our way back towards the 112. 112, however, is a 20 SMA, and that's going to be a big resist point here. Euro still very much remains in a downtrend, but it's may have had a sort of a climax low here, assuming that the U.S. yields and rates don't improve as we go forward into the week. Cable also tested very, very key level here of the 120 and came back up very mildly here, though, not a lot. Again, we'll have to see what rhetoric comes out this week out of UK. The data itself was interesting, actually, ironically, was the Bank of England in some ways try to provide some serious pressure on Brexit by saying they're not necessarily going to lower rates if there is a hard Brexit going on, because they're fearful of supply side inflation shocks. And clearly I think that they're playing politics here, but still the point being here is that you take away the political risk here, and cable should be trading 125. So it's very difficult to get short the trade here, especially if we get maybe 2 or 3 days of positive candles with cable coming out. But on the other hand, you also have a huge chaos agent number 2 across the pond with Boris Johnson. And if they're gung-ho decided on a hard Brexit, and there is any kind of a chance that the electorate gives them even a mild vote of confidence, that really puts the pound right back down to perhaps the 115 level. The point being is it's very hard to catch a falling knife now. Whatever bounces we have really need to be confirmed by a change in the political attitude of negotiation. We'll see if that happens. For now, I guess you have a small amount of risk here with the 120 and a pop to 122, 2250. Certainly possible. It still would be underneath the very, very far away 124 SMAs. And then yen was a huge reversal. In fact, one of the ugliest reversals we've seen in a very, very long time. If you look at this, this was literally sort of one of the most bearish moves around, because we take out the 109s and then reverse hard for 2 days, break all of the sort of intermediate support. What is this? The support here was what? The low here was 106.78. Well, we're broken mildly here, but we still ended up pretty much on the lows here at 106.56. And this large fat finger low of 104.64 certainly looms as a possibility. This really becomes now very much a story of risk off equity market. This is really going to be an equity market trade. Are the equities going to really swoon? Is bonds going to yields going to go down to like 185 on the 10-year? All of those pressures certainly could take yen all the way down. Certainly the first order of business is the 106.50, 106 level. We'll have to see if it can stabilize. If we have a couple of days of stabilization, maybe this kind of holds as a level. But for now, momentum is very much to the downside. And I would say until and unless the 108 level is broken to the top side, whatever consolidation you have is by no means evidence that we're bottomed out. It just simply means we're consolidating. So if you're getting a short here, you probably don't want to get yourself stopped out until you've broken the 108s to the top side. And the downside move here still has potential to go, especially maybe down to the 106, 105.50 level. Everything now depends on politics, which is why it's so hard to handicap it. But the charts are certainly showing you a pretty negative picture. That's how the majors shape up. Wish you guys the best luck, the best trading. Boris, over and out.